Hey, Tyler. Yeah, the story, of course, that was just quoted in terms of Bloomberg is a story we actually first brought people this morning in terms of the plan that First Republic is undertaking to try to get assets off its balance sheet. They put a number on it. Of course, the market reacting perhaps to that as well. But the overall plan is one that we went into in detail this morning, and it would go along something like this. You get the same group of banks that actually put in the $30 billion on March 16th in deposits to then line up and say, OK, we will now put together capitalization for a special purpose entity that will buy those loans and securities from you at a higher level, at least, than they would be marked to market right now, perhaps still below where their book was or where they originally were made. And that would free the balance sheet up to have some repair. You'd get rid of these assets that are underpaying while you're dealing with a deposit base that you're paying an awful lot for. And then you would re-equitize, go out and try to raise equity. There is a belief on the part of First Republic it could do that were it to be successful in this asset sale plan. And then you could go back to the business of really being a bank by making loans. The problem is it's not clear at all that any of the banks that might be counted on to try to step up for this purchase of assets are willing to do so. And so a question becomes, is the Fed or Treasury or FDIC willing to say, you need to do this? Right now, that does not seem to be the case, Tyler. And so it's very much unclear that First Republic is going to be successful in any plan to rid itself of many of these loans and securities that have contributed to what I've reported for quite some time is as much as a $25 billion hole in its balance sheet. If it's unable to do that, well, these next few days, again, as we said this morning, are key. And then you have to wonder whether, in fact, the FDIC is going to move to take it into receivership. So that's kind of where things stand right now, kind of a fighter against the ropes, waiting for the referee to call a technical knockout, that referee being the FDIC, but hoping perhaps they have one last punch left that can actually get them out of their corner.
And, David, plenty of people would say this isn't about whether First Republic becomes the latest bank failure. The real question is whether this is going to push the administration back into making explicit or not the deposit guarantee and or their willingness on the sort of the policymaker side of this to step up and help facilitate or take any losses on some kind of acquisition. And none of your reporting suggests that, but I think that hope to some extent was probably priced in a little bit here, that you can kind of lean a little bit on Washington. And I'm just curious where we go in the next couple of days. I think will have a lot of bearing on how calm or not people feel about the system more largely.
Yeah, I mean, listen, regulators were successful, Kelly, in putting a good amount of time between SVB and First Republic. It's not as though this has been a secret. We've been talking about First Republic since those very earliest days when SVB went into receivership, followed by Signature Bank right after. And so that has been healthy for the markets. We've seen earnings from many or most of the regional banks, if not almost all of them, and things seem to be much calmer. And so there is a belief, I think, that were First Republic to be taken into receivership, it would not be seen in any way as a systemic risk. It still would be expensive, by the way, for the FDIC, potentially. It would mean assessments on some of those same banks that are being encouraged, perhaps, to participate in buying some of these assets. But it would not be systemic. And I think that may be one motivating factor for why Treasury, Fed, White House are not necessarily pushing hard here, at least as far as I'm aware, for those banks to step up. There is not going to be a sale to a third party or to another bank here. The mark-to-market is too large, the hole in the balance sheet, and therefore what you do to your own book value, that's always been the problem. There are plenty of potential banks that would like to have had the franchise First Republic had, but they're not going to step up to take the hit to book value. They would have had to do so. That would have happened over these last few weeks if, in fact, anybody was interested. So that's kind of where we are right now. And again, the next couple of days, we'll see. Maybe they can pull something off here with this asset sale.